Hi guys, hope you're doing well and had a good trading day. I'm Tom and I'm back to talk to you about a SPOO breakout trade I took on last Friday's NFP. I've got some order flow this time, which is good news too. So I just want to firstly highlight the structure in the market that made me favor SPOO over, say, a gold or one of the bonds. And then talk to you about that, because there were some great moves in other markets, but I felt like SPOO was really set up to, as I said, break out. There had been some prior patterns that SPOO had done that had reacted really well, and I'd actually sort of looked past it as a market to trade off this NFP. And so that was something that was sort of tipping me towards it as well. So sort of really clear breakout trades when it's sort of been trading towards the high, into the NFP, into the number, and then it's just done a very clean move through the highs, taking out key technical levels. I'm also going to show you the execution structure that I was looking for that was in a previous NFP, the last one, and then show you the order flow and then talk about some key takeaways and lessons that I took from this. So this is the structure in the market coming into this NFP. We'd had this big liquidation day on the Wednesday, massive move. And we'd had this sort of spike down into the close. The next day we'd done quite a sort of tight range with a very passive low. And on that cash session really sort of exploded after testing down, but it sort of exploded up and left quite a nice P shape. I really like P shapes because maybe trading into them is not great, but trading away from them can be really good, because I sort of look at them as like a P for preparation. We had this really blocky high, not great, no real like excess, and not suggesting that someone stepped in and aggressively drove the market back down. This 2 TPO ledge from the Wednesday down day, and this poor value area. It's quite flat, bar the VPOC, it's quite a flat value area, so I felt like this was a zone in the market that we could sort of trade through fairly easily. And I was looking up to this prominent VPOC, which in hindsight maybe was expecting a bit too much from a market that sort of put in a lower low here and then a lower high here after sort of Omicron sell-off liquidation. But yeah, we're trading at the weekly VPOC, got a bit of a cave in the volume here that I thought we could sort of just go straight through if the right participant was in the market. So this trade was a trade that was maybe more of a technical setup that I felt the NFP could bring in the right participant to sort of make that happen. We had sort of very blocky, very passive high, not so blocky on the daily overnight session. And I was looking for this NFP to sort of play into this technical idea. I felt like there was the potential for us to trade up here if the right participant was in the market, right momentums, and the right order flow. And this is sort of my higher time frame charts. So we've got the daily here, which I thought was quite important to this trade, put in this big daily reversal candle. We're back above this key zone, which was also the September all-time high that we'd rolled down from and then broken out and ground up before we liquidated on the Omicron virus. So this is what I mean by the higher lows and higher highs. So I was sort of looking to play this sort of counter move against this, and I felt that an NFP number that was maybe a bit ambiguous in terms of what it might influence the Fed, and whether it would actually influence the Fed is another question. But I felt like this was a time in the market that could bring in the right participant to make this trade happen. We had quite a nice tight block after the Thursday sort of test down and aggressive bid up. So the market accepted value up here. And that was actually something I didn't mention from the last slide. The whole idea of this sort of the spike guidelines, when you get a spike in the market, the way that we then trade after can provide a lot of information. And we managed to shift value back up above the spike, which was really adding into my conviction that there was going to be potential for an upside move. So this is the 30-minute cash, hourly, and then the daily. But I was thinking that this was quite an obvious zone in the market that if we got the right pattern, the right participant, we could really thump through. And yeah, I was targeting this 27, which, as I said, was just below that prominent VPOC. Okay, so this is the last NFP, sort of 15-second chart. I quite like to use 15-second charts for when the markets get really volatile, because I feel like it can give you a little bit more of a pattern than, say, the 1-minute chart will give you. So we'd had this blip up on the very initial reaction from the number. In this case, we'd taken the highs on the day, come back down, really tested that positioning, that buying, put in a nice buying tail, and then back through the scene of the crime, started to really trade, put in a nice sideways and continued. So this was the sort of thing I was looking for off this NFP. And I will show you what we did after I've talked about the execution checklist. So just a quick idea recap. So I was the P-shape play inside P, which is showing that we've got this aggressive sort of buying tail left inside the prior day's range on the cash session with a blocky high. And this was the sort of area of the market that I was looking to execute through, ideally having a position on it before, because I didn't want to be buying through that high ideally. However, that was something I was willing to do. The market had managed to establish the value above the spike. And this is something I want to stress, because I felt like this was a real key indicator that maybe that liquidation was the final sort of flush that we had. And the market was sort of ready to whip back the other way. So I wanted to offer very weak number or inline number. The thoughts maybe being that this might sort of slow the Fed down a bit. Whether that's the right thinking, I don't know. And inline wage growth. So I didn't want the wage growth to be going up, because that's the sign of sort of inflationary pressures. And I wanted an inline number or maybe weak, because I felt like that could potentially give us a bit of a flush down off the number, and then the market digests it and then starts to bid. But yeah, it's a breakout trade. So I really wanted to be patient with this. And my execution checklist, I was very clear that I'm not going to be just hitting the blip. I'm not looking to have X, Y, and Z in the release. That would mean that I want to just get in as quickly as possible. I wanted to let the market settle, put in that sort of 15-second structure, and then use that to play off with the right order flow into this idea. But yeah, letting the market settle, it's very easy to panic in a way off a data release like that and be like, oh, it's massive, click, and you then end up buying the high, puking the low, and watch it then go, and you've been stopped out. So yeah, there was very specific book conditions I wanted to see. I wanted to see it really firm the bid, take over, and yeah, start sort of seeking higher prices, but to allow it to show me that it wanted to do that. Okay, so this is the recording from the day. So this is literally just before the number. As you can see, we've gone very thin. And SPU is trading towards the highs of the day, which I've sort of marked out, so that if we do, have I paused it? No, we're live. So if we do blip it, I'm still going to be aware to where that high is. Can we see the time here? So the numbers just dropped. The market smashes straight up, as I showed you in that prior 15-second chart from last time. But in this case, we failed to take the high. We bid up towards it, but then came straight back down. The scene of the crime was 85. And I wanted to let the market have some time here. Like, it's very easy, as I said, to just sort of get a bit frantic and want to be involved straight away. But I was very clear that I wanted to let this sort of 15-second chart structure blip up, come back down, hold, back through the scene of the crime once the bid firms. So we can see here, that was 283 taken at 83, so just below the scene of the crime. And the market holds, starts to bid back up, has a little retest of the price and comes back through it. But the market is able to keep going. You can see gold's flying, and this was sort of off the back of the 30-year, I think. I'm going to talk to you about that afterwards, but let's just focus on the price action of SPU right now. So SPU is still quite flicky. I wasn't really 100% sure. But playing through the scene of the crime, I was quite keen to do this, and it was lagging other markets at this point. And you see here, it goes straight on side, straight through the daily highs. So I'm now watching to see what the price action is like. We get 140 taken there, and the market keeps going. So now I'm just trying to sort of manage myself, and I'm going to talk to you in a moment about how I actually didn't manage myself or this trade particularly well. As the market's sort of trading up, It's taken the overnight high and is holding, continuing to seek. This is a 2 TPO ledge that I mentioned earlier from the Wednesday down day. And that was sort of a key reference point in my mind because it was sort of the start of that real liquidation move into the close on that Wednesday. But you can see the bid keeps coming back. We keep sort of holding any pushes down and coming straight back, looking to seek higher prices. And this 94.25 was actually the cash high, that blocky cash high I talked to you about. And we can see this period area of low volume that's been shown. We trade up through that high, now up to that sort of TPO ledge. And you can see up here at 4,600, there's a 400 lot. And my thinking with that, I saw that and I was like, okay, this is great. This is sort of working really well, executed nicely on side. Now I need to start managing it. I was looking at that to take, and we'll see what it does, but to take, come back and hold. And I was a little bit stubborn in my holding. We take it, blip up, and then it comes straight back through it. And we actually cannot trade back above this price now. So the market's not stalling, the momentum's still there. And in my mind, I'm thinking that I want to see this do and sort of make a new high fairly soon. I'm sort of checking where my price is. And this for me was really frustrating right now because I'm now sitting, having let the market come back 6 handles from the high that it's made, thinking in my mind, wanting it to make a new high, but I've now kind of lost the objectivity that I really need to have at this point. Gold's come back a bit. You've seen the euro dollar's come back off the highs. At this point, in hindsight, it's a bit of a tricky one because I had this wider target in mind and that sort of took over a bit. Having executed really well, I then I fudged it a bit, if I'm going to be honest with you. I was trying to hold, but also wary that I wanted to take from the trade. So I then ended up putting a stop in, this was below sort of 15-second range we'd formed, to try and bank, which I don't think is the right thing to have been doing. This zone is the sort of area that you want to be looking for some absorption on the footprint, maybe even to add, looking for that second leg. So I don't think there's too much more value in looking at this because I just wanted to show you that sort of the execution and the way that we traded up to that 4,600, took that 400 lot and then very quickly came back down and couldn't trade back above it. And this is how we traded. So the 280 taken was kind of quite a key part in my mind to be executing this trade. Once we'd taken that order, shown an ability to sort of rebid back through that price and then start trading back up. As soon as we went through the scene of the crime, I was like, okay, we're on. And the fact that I went on side so quickly was obviously, that was great. But I would like to have also hit another one through the highs. But I wanted to sort of manage this trade. I didn't want to skew it and then it blip and then come back down. So this is the footprint. You can see it's all very light. We don't really start getting any deep bits on it until up here, which is that 400 lot that was taken. And when we took that 400 lot and sort of flicked through, that was sort of an exhaustion sort of end of the move. And I remember I spoke about this in the last video I did, that when you get that sort of price action that's like a bit of a flush through, the price action is giving you information. I lost objectivity at this point. I was stuck in the fact that I was 15 handles on side and my target was another, 25. And I wanted to hold, and I was a bit too stubborn with it, if I'm going to be completely honest with you. And this is where I got stopped out, trying to sort of take from the trade. But yeah, this pattern is something I'll be looking for again, but it's a very similar pattern. It all happened a little bit quicker than the last NFP, but we had that flick up, test down, and then the bid sort of firmed as we saw after it took that 280 and then started seeking higher prices. So I was happy with my execution on this. Management of the trade and management of myself was maybe not as good, was not as good as it should have been. And in sort of future, I will be more conservative and listen, I suppose, is the key. But this is the 30-year, and the 30-year with prior NFPs is correlated quite closely with SPOO. And you can see how we get the blip up in that first minute, and then it starts to stall. I didn't have this sort of in my peripherals. I was focused on SPOO, had the blinkers on, and was trying to sort of hold. But say I had this up, I think, and was aware to the correlations that were there, I would like to think that it would have helped me manage the trade a bit better and to sort of take more from the trade, because it was a really good trade. And the fact that the sort of place I had my hurdle, which was like the 4600, that 98 TPO ledge, when we traded up there and flushed it, that was, it was key information that could have sort of helped me in this moment. But yeah, we can see how the 30-year flicked up and then quickly came back and started trading down. And yeah, this is just sort of to show you the 15 seconds a little bit further. But we started bidding those sort of really big 15-second candles from 31. So it was all a bit quicker than the prior time, but that maybe should have been a bit of an indication, I suppose. And then the trade, I'm not going to talk about the trade of cash, but I think as a result of the unemployment rate that came with that NFP, which was actually better than expected, was maybe seen as potentially giving the Fed even more of a green light to progress with the faster taper that had been spoken about by Powell. And this is the profiles. So as we can see, we flicked that ledge into cash. We managed to hold up there, but off cash, we then quite aggressively, after a quick test up over the overnight highs, rolled over. So yeah, I think we'll hit the key takeaways now, because there's not all that much more to say about the trade. But what I did well in this was having that clarity of what I wanted to see and how I wanted to do it. I felt like I was very clear on the structure I wanted to see, the fact that I didn't want to just be hitting off the number. Yeah, I feel like I executed really well. But what could have helped me in this situation was the 30-year. I did know from prior debriefs that the 30-year had been very correlated with SPOO on this sort of initial move. So having that sort of in my periphery whilst trying to trade this NFP, I think next time I will be if I'm going to be looking to trade SPOO. And because the correlations really help, they can give you conviction to access or to hold. But that's something that I will for sure be doing next time. And this is something that I've been thinking about a lot recently. When making a decision, thinking about what is the driver of the decision, but also how this is going to impact my next decisions. So in this case, the holding, I've ended up having not a very good day. I let the frustration of letting that trade come back sort of take over. But yeah, thinking about how that's going to impact. You can always get back in. If you get out at the 4,600 after seeing that price action, you've listened to the market. And if it then does firm up and want to go for another leg, if you want to, you can reaccess. But yeah, managing yourself and not just the trades. I'll leave you with that, because I think that was quite pertinent in this scenario. But yeah, thank you very much, guys. Have a good evening.